something, but I guess best learning comes from the hardest situations.
I was witnessing a roaring stock market at that point in time, followed by incredible and spectacular crashes as well.
But let's look at the Access Capital journey where you built an influential macroeconomic franchisee from scratch. What was your North Star in that role?
Fund managers were more debt oriented. But very quickly, I realized that it doesn't hold any currency with domestic equity investors.
Sir, you were among the first to analyze the tectonic shifts caused by digital disruption in India's supply chains.
India's supply chain is getting formalized. So it was a realization that actually tax and technology were disrupting that particular industry.
To our audience, welcome back to another episode of FaceTime with Leaders, powered by Directors Institute, World Council of Directors. This is not your average panel talk. This is where titles step aside and journeys take the mic. And today's guest, Mr. Prithviraj Srinivas, is no ordinary economist. This is a man who doesn't just read the Indian economy. He's been out in the field living it. From rural India to global capital desks, from micro maps to micro farmers, Sir has built a career where research is not a desk job, it's a full-time sport. He's taken calls with the World Bank, debated with policymakers, shared chai with Kirana store owners, and probably had an Excel sheet open through it all. Today, we're peeling back the curtain on nearly 2 decades of decoding India. From demonetization to digital disruption, from macro cycles to micro realities. Buckle up, you're about to hear the story behind the spreadsheets. So, sir, to start with, every remarkable journey has a quiet beginning, long before job titles and boardroom strategies. I'd love to rewind with you for a moment. What did that early path look like for you?
Thank you, Tanay. Thank you for that wonderful description. I've hopped from one interest to another in my life, and hearing all of that being described by you brings back such wonderful memories. So, my journey as an economist started with an interest in understanding capital markets. During the late 1990s and early 2000s, when I was forming my view about the career that I wanted to take up or the life that I wanted to lead, I was witnessing a roaring stock market at that point in time, followed by incredible and spectacular crashes as well. During the Asian financial crisis in 1997 and the dot-com bubble going bust in the early 2000s. All of these events left a very deep impression on my mind, and I wanted to understand these events better. So, in the pursuit of this, towards this sort of understanding, is when I picked up more knowledge about how an economy functions, how an industry is structured, how political structures influence industry as well as economic activity, and the concept of money itself. So, in a nutshell, I would say that it's a deep desire to understand how a society functions or structures itself. I mean, that's been the core of one of my beliefs. So, in towards this end, when I was looking at coursework in India for economics, at that point in time, it was a lot more academic and developmental oriented. So that's one of the reasons why I chose to study international economics and finance at the University of Queensland in Australia. It was among the top one or two universities at that point in time. And yeah, I mean, I fortunately graduated during the global financial crisis. So not a great time to find a job or get married. And apparently I did both at that point in time. And luckily for me, I found a place with HSBC's Asia Economics desk. And I got a great opportunity to train under very senior economists who had spent decades with the IMF. And I would say that, I had built up certain techniques of understanding and analyzing an economy, primarily looking at data and also speaking to policymakers as well as analysts on the ground. But all of that took a U-turn when I sort of joined Access Capital, where I had to, on the very first week itself, I was sent out on the field, to gather information and sort of synthesize all of that into a narrative for very hard-nosed equity investors. Um, I will give you, some very interesting, sort of takeaways there. For example, I mean, during that period of time, I sort of very quickly realized that there are a very few prominent families, in tier two or tier three towns that tend to control the entire economic activity and the lucrative businesses. And this is a pattern that you see across tier two or tier three towns across India. And something that you would not sort of find in data or just speaking to policymakers, right? Post Access Capital, I had a brief stint with the Mahindras. So it was a very great opportunity for me to look at how a very large multinational conglomerate operates. It's almost like a mini sovereign. They want information that's very granular as well as global. For now, I have taken a break from the corporate world and setting up my own business. So I'm sort of getting a practical experience of how the economy and the administration actually works. And my hope is that all of this understanding culminates into a beautiful book at some point in time in my life.
That's in fact lovely. And like you rightly pointed out, I mean, when you moved out, the economic condition of the world would have just hit like something. But I guess best learning comes from the hardest situations.
Absolutely, absolutely. Well said.
Sir, you've been at the heart of some of India's biggest economic pivots, from post demonetization transitions to global supply chain shocks. But let's look at the Access Capital journey where you built an influential macroeconomic franchisee from scratch. What was your North Star in that role? Like what made you approach made your approach stand out to global investors and rural entrepreneurs alike?
Tanay, so I entered Axis Capital armed with this, technique of analyzing a macroeconomy, which I had learned at HSBC, and it sort of catered mainly, I would say, at that point in time to global investors as well as, fund managers who are more debt oriented. But very quickly, I realized that it doesn't hold any currency with domestic equity investors. Now they have a tendency to look at things which is more bottoms up sort of an approach, and I was giving them a top down sort of an analysis, right? Um, Fortunately for me, I mean, or I wouldn't say fortunately, but incidentally, during my stint with Access Capital, we had multiple economic shocks, from, say, demonetization to Trump tariff wars with China, as well as COVID. These were great opportunities for me to sort of use my knowledge that I had built up, and to sort of build out what's the implication of these big macroeconomic impacts on the economy and sectors. And I had the opportunity to work with some fantastic senior researchers, sector researchers, and we were able to mesh together all of that, and come out with some unique insights into what would be the impact for particular sectors and companies. Um, so I talked about, how, for example, I remember having conversations during demonetization, right? I was telling people that, look, demonetization, for example, only has an impact on the working capital of the underground economy. It has no impact on the wealth that has been built up by the underground economy over time. And very uniquely at that time, a lot of people believed that because the supply of money was shrunk, that, the speed with which money gets transacted would also shrink. But I was arguing exactly on the opposite side, saying that actually the speed would increase. And the proof of the pudding was that, during the demonetization quarter, we saw some of the best sales as well as GDP growth during that time. And another example would be COVID. Like during COVID, a lot of people at that time believed that, inflation would just go down because demand has collapsed. And I remember a very distinct conversation and an elevator pitch to a debt fund manager saying that, look, no, I think inflation is going to go up because supply was sort of being impaired. Like all the supply and logistics were being impaired. So very, I would say a very interesting sort of outcome. And over time, I've sort of built this knowledge of the economy through reading data, reading policy, and being sort of refined through all the conversations that I've had with economic players over time.
Yeah, I mean, all those situations changing, like you very rightly said, COVID at that time, people saw it very differently, but you having the knowledge base and experience in that field would have been able to look at from a very different angle. And a lot of people did that, where, the market, people were scared and all of that was happening, but some people invested and earned rich rewards because they
Absolutely,
probably saw it
absolutely.
differently.
Now, having a good framework and the technical background always helps when you sort of framing what's happening with with what's happened in history as well as the economic models that are out there.
Yeah. Sir, you were among the first to analyze the tectonic shifts caused by digital disruption in India's supply chains, particularly across Tier 2 and 3 markets. What led you to chase that story, and what did you see on the ground that others might have missed?
So we were doing a lot of these field trips and field visits, right, to collect, collect information from the ground. And I remember that, post GST and demonetization, a few years after that, some of the, in one of the surveys, we were finding it very difficult to make sense of the feedback that we were getting. And it was during one conversation I had with a FMCG wholesaler in Coimbatore. And during the conversation, it just struck me that, no, look, I think the India's supply chain is getting formalized. So it was a realization that actually tax and technology were disrupting that particular industry. During that time, the survey was telling us that rural demand was doing fantastically well. There was premiumization. Two-wheeler sales was doing very well, but you had very tepid demand on four-wheelers. And if you remember, my point that in most tier two and tier three cities, you had few prominent families who held the entire economic activity, right? Now, in many cases, these guys were large distributors. So what was happening was that because of tax compliance and technology, their confidence was being disrupted. So in a way, we were able to go and tell the market that, look, things are doing. I mean, don't look at the tepid demand in four wheelers in a negative way, because it's actually indicating something more deeper and foundational and would actually be positive in the medium term.
Yeah, very well said, sir. So, your career has been defined not only by economic analysis but by your commitment to capturing reality on the ground. What inspired this field first approach to macroeconomics? Was there a moment when you realized that real insight doesn't always come with data terminals, but from a conversation in a mandi, a remote town, or a family run business?
So I would say that, look, my initial years, I spent just analyzing data, right, secondary information. So in a way, it is both the job and a curious mind, so that sort of put me out in the field. I had to adapt. Um, uh, while you could have a lot of the observations that you sort of make, there is a tendency to fit it into a very popular construct or a model, and it was very easy to explain to a foreign investor who had this understanding as well, right? And so they would sort of accept your narrative, because it sort of automatically fit into the mental models that they had. But domestic investors, they went by ground realities, and I had to adapt, right? So in a way, I have now sort of learned to observe things, but not automatically attach them to some sort of mental model, right? And sort of look at that independently, analyze them before we sort of construct some sort of a narrative. Take things as see things as they are, before you sort of form make an analysis, right? Don't go there with an analysis and fit the observation to it.
Yeah, very well said. I think that's something that anyone who once they go onto the field in their professions realize very soon that what you study is one, but what comes off the actual ground will always be different.
I'll give you if I can take a minute here, I'll give you a small example here, right? So when I was studying in Australia, I know at that time the education were, what it really taught us was this. A perfect competition is the best industry structure because it maximizes the welfare for consumers, right? They get a lot of choice and at the right price. But during my own expeditions, when you go into that country, you find that there are only two major retailers. Most of the products are homogeneous. I'll give you an example of a banana, right? A banana there in Australia is just one single variety. It looks great. It's of a, it's of a single color and structure, but it doesn't taste that good. Whereas when you look back at our own country, our bazaars and mandis are filled with so many players. There's so much of variety. And even if you take the same example of bananas, there are so many different varieties, and all of them taste different and they taste great. But the modern economic construct would tell you that Australian consumers have higher welfare than Indian consumers, right? So there are still a lot of things that I think are left unanswered, and there is scope for us to look into those things and figure out why this difference in understanding is there.
Yeah. All right, sir. Time to shift gears. We're going to do a quick rapid fire round. No analysis required, just your first instinct. So, are you ready?
Yeah, absolutely. Let's go for it.
Perfect. Your go to comfort food after a week of back to back data reviews.
So I have a sweet tooth. So it was for me, it was this fruit cream that you get at Haji Ali in Mumbai was something that I always went to. But otherwise, as a South Indian, for me, some rice, rasam, and some very flavorful protein next to it is something that is home. Yeah.
Lovely. An economic thinker or leader whose insights still surprise you.
The person I mean, there are a lot of people in my field whom I really look up to, but the person that I'm currently sort of quite impressed by and I'm following is Mohammed El Erian. He's a Egyptian American economist and businessman, and currently the president of Queen's College in Cambridge, and was the ex boss for PIMCO, which is the largest fixed income fund managers of the world.
One tool, gadget, or app you rely on for clarity.
I can't do without WhatsApp on a daily basis. I mean, it's there for to connect for both business as well as family.
Yeah.
I think there's a shift away from email. People sort of want short, purposeful communication, and you can sort of always get back to others at your own convenient time, right? And read it and get back to them. So I think WhatsApp is something that you reach out to
Yeah,
on
yeah,
a daily basis.
absolutely. A hidden interest or skill your peers would never guess.
I bike, I scuba dive, and I'm an aquarist, right? And Unfortunately, some of these interests I've not been able to pursue over the last 1 year because I've been, involved in setting up the business. But I'm hoping to sort of rekindle my interests and hobbies in the next coming months.
Lovely. The most unexpected place your research ever took you, physically or intellectually.
Both physically and intellectually, it's been Sri Lanka because it's a cherished memory for me. I've been tracking that economy right out of the civil war, so it was wonderful to see how the economy transitioned out of the post-war period. There was one vivid imagination the imagery that I have, right, where I used to go to the Central Bank of Sri Lanka's office, and initially it used to be armed by a huge battalion of army men, and then the next year it was a very large number of police people, and then the number of police people came down, and finally it was normal uniformed guards, right? So it was a beautiful image of how the economy sort of transitioned out of a civil war and into peaceful times.
Yeah, it would have been like just seeing an economic stand up from scratch back again.
Absolutely, absolutely, a beautiful, beautiful experience for me.
Yeah. Okay, so that gets us to the end of the rapid fire round. Thank you so much for your quick and prompt replies. Now,
Thank you, Tanay. Yeah.
most welcome, sir. Now, let's talk a little bit about governance. India's coal sector and the broader institutional ecosystem went through a reckoning during the Coalgate era. Given your work advising institutional stakeholders and tracking sectoral reforms, what lasting lessons do you believe the system truly internalized from that chapter, and how did we embed governance deeper into economic planning beyond just compliance?
Yeah, I mean, I remember this event quite distinctly because It was a time when, most of us economists and analysts in the street at that time were, dubbing this as the policy paralysis period, where we had a complete standstill in terms of investments. And I don't think we have even recovered from that period, right? I mean, our own country's investment to GDP ratio, which is called the investment rate, the peak was 2011. I don't think we've not recovered back to that high still. So it was a period where bureaucrats would not sign approvals simply because they feared appraisal reprisal, right? And My sense is that the lens in which we should look at this, right? I mean, we should take a little bit of a longer lens. um, India as an economy was transitioning from a planned and controlled economy where the public sector had a big role to play to one where increasingly you're seeing private participation and more market influence. And great examples are the banking sector and the telecom sector and the aviation sector, where you're seeing more private players have had a positive impact and an outcome for that industry. There's more choice, there's more investment. Unfortunately, it did not take place for the energy sector. It should have happened, but it did not take place, right? So, to answer your question more directly, I think it's we should have much better governance, transparency, and accountability when we are entrusting public assets to private hands. So we need to have, maybe a very clear policy which the public sector has, which the public in general have had a say, and industry has given its insights, and it's also sort of backed by very high levels of transparency through, let's say, Right to Information Act and an independent judiciary which is fully accountable to the public. So, in a nutshell, I would say that, all we are asking is that all the economic actors that we have in the economy, if they played their role as per the rules and laws, I think we would not get into such trouble. And these are the things that we know we need to sort of keep in mind as we go forward.
Yeah.
How this transition is supported through transparency and accountability.
Yeah, because with more players coming in and going into diverse hands, it becomes even more important.
And more importantly, I forgot to mention this, a mature media as well.
Yeah, very well said, sir. So, you recently chose to engage with Directors Institute. We would love to know what inspired that decision and how has the learning shaped your thinking on today's boardroom priorities, especially around ESG, digital governance, and long-term value creation.
So my thought process was quite straightforward. I had moved away from the corporate world, but I also wanted to continue to engage with the leaders in the corporate world. And the Independent Directors Program with the Directors Institute was a great platform for me to sort of continue to do that. And I also saw it as an opportunity for me to sort of, through observation, learn about leadership and business strategies during those corporate board meetings, and obviously also provide my contribution as well. One of the things that I've sort of, I mean, so far, whatever coursework I've gone through, I now have a greater appreciation of procedures and protocols of, how to run a corporate board. And one of the things that I've sort of really enjoyed is going into details of the legal casework that is being cited throughout the coursework. So that's been quite insightful and quite enjoyable for me.
Lovely, sir. Thank you so much for those kind words and for not just the depth of your insight, but for humility and clarity, with which you've shared your journey. Rather, you've reminded us that economics isn't about abstraction; it's about context, consequence, and conscious. So, thank you so much.
Thank you, Tanay. I would like to take this opportunity to thank the Directors Institute for providing me this opportunity and the platform. And I look forward to an enduring engagement with the Directors Institute. Thank you.
Lovely, sir. To everyone listening, if today's conversation made you reflect on the human side of markets or challenge the way you look at macro trends, please do share it forward. This is FaceTime with Leaders, powered by Directors Institute. Until next time, stay thoughtful, stay future ready, never stop asking questions, and of course, have fun in your journey. Thank you so much.